If winter is coming was the familiar refrain in the Indian startup ecosystem in 2022, then 2023 was all about the long wait for spring. As predicted, the venture capital pipeline did freeze over, and as you can see, funding slumped to a 5-year low in 2023. Now, what's interesting is, while founders were facing icy winds, investors were ready to warm up their coffers after record investments in 2021. As a result, what we have seen over the last 2 years is perhaps the largest accumulation of dry powder, a record $20 billion worth of fresh India-dedicated funds and another $40 billion that global private equity and venture capital investors are likely to allocate to Indian startups. Now, the global investment outlay, as you can see, stands at a whopping $500 billion. Now, as we assess these numbers, what we have to remember is this. While these announcements for new funds have been made, a large majority are yet to be closed. Now, if we take a closer look at the large global fundraisers within India play, on the list are some of India's top unicorn builders. Now, of these, Atlantic, General Catalyst and B Capital, all of them plan to invest at least 20 to 25% of their funds in Indian startups over the next 2 to 3 years. Now, among those that have announced purely India-focused funds, Peak 15 Partners, which was formerly Sequoia Capital India, has the biggest war chest, about $2 billion. For each of the VCs on this list, these are the largest ever India-dedicated fundraisers. It's a long list and includes the likes of Matrix Partners and Lightspeed, among others. Now, over the last 2 years, several homegrown VCs have also seen their funds grow in size and scale. Bloom and Fireside are good examples. This year, we have also seen many more announce their largest funds till date. While 314 Capital, Arkham Ventures and IAN have a laser focus on backing early-stage startups, Shirate and Epic Capital plan on investing in growth and late-stage startups. In fact, Shirate launched its maiden growth fund this year. Now, if you move further down the venture investing funnel in India, there are over 100 active micro-VC funds, each with an average fund size of more than $20 million. Now, these investors enter early, mostly at the seed stage, with a futuristic investment thesis. Now, these are, of course, clear signs that India's domestic venture capital ecosystem is evolving and maturing. But given the global macroeconomic situation and the high interest rate regime, fundraising has been as tough for younger micro-VCs as it has been for startups. But the dry powder, nevertheless, is still large, the largest ever pool of domestic and foreign money available for Indian startups. But the deal-making has slowed to a 5-year low, and investors aren't loosening their purse strings yet. Why? Rahul Chaudhary of Stellaris Venture Partners says that there is excessive dry powder in early stage, but not enough founders are starting up. Webb of Domkunvar of Better Capital concurred and said the period is similar to what he saw for a few years after the dot-com bust in the early 2000s. The coming of generative AI this year is also likely to have sent several founders back to the drawing board. When it comes to growth stage startups, 2023 was all about transitioning from the growth at all cost strategy to profitability. Rajan Anandan of Peak 15 Partners says growth stage investing remains slow. Investors are focused on high quality, sustainable companies. The correction that it has brought about has certainly reset expectations of founders, says Nitin Kamath of Zerodha. And he says that that's a good thing. Valuation will have to correct further, losses will have to come down, and more unicorns will have to head to Dalal Street and find a way to offer exits to investors. Why? All that for confidence to return to Startup Street.